The global trade order in his first term, riling up the Federal Reserve, making stock markets dance to his erratic tweets, now in charge again, but this time the stakes are even higher. It has taken a month of Donald Trump's chilling revolution for the stock market to start sneezing. The main New York stock share index, the S&P, has begun falling on the 19th of February, which means it started doing so 29 days after Trump's inauguration. Now it has dropped a bit more than 6%, while the more volatile Nasdaq is near a technical correction of minus 10%. Closer home, the Indian equity markets already looking quite wobbly. The latest reports painting a picture of widespread valuation corrections, only 10% of Nifty stocks trading above their 200-day moving average. So this correction in large caps is dragging on. Small and mid caps, they're still looking pricey. Investors are anxiously waiting for clarity, and we don't know when that's going to come. Meanwhile, despite the 16% drop in the Nifty, the volatility index remains eerily calm, suggesting that fear hasn't quite peaked yet. So what happens next? Will MAGA policies disrupt global and Indian markets further? Could Trump's aggressive stance on trade, on tariffs and the Fed put that additional pressure on equities worldwide? And how should investors navigate the storm? To help us make sense of it all, let's welcome our expert panel. Santosh Rao is Head of Research and Partner at Manhattan Venture Partners. He is joined by market expert Sunil Subramaniam and Arnab Das, Global Macro Strategist for EMEA at Invesco. Good evening, gentlemen. Let's dive straight in. Santosh Rao, investors, of course, now that we are seeing these tariffs on Canada as well, and that's the breaking news that's coming through, 50% on steel and aluminium. Investors are rattled by the uncertainty over tariffs, these looming trade wars, so the fall is hardly surprising in the markets. But a lot of economists, they're now predicting an economic slowdown, if not recession, in the United States. How deep is that fear really, and how much damage can it do to the stock markets? Santosh Rao.
Yeah, at this point, it's more the headline risk, and that's what you're seeing. Market is worried about growth down the road. I think they were expecting a Trump put, so to speak. They thought he'll come in when the market goes down because he's very tied to how the stock market performs. So I think at this point, they're not seeing any signs of Trump put. So it's going down. But overall, I think he came with a clear mandate that he wants to level the playing field. He wants the tariffs to be very reasonable and wants to be fair. So I think all that is still playing out, but the media is really hyping it up, and they're really taking it. They've got a political angle to all this. Because what essentially Elon Musk is doing what America needs to do, cut costs and balance its budget. We are way out of whack in terms of the budget deficits and the debt side. So he's doing what's good for the country. But the opposition and the media are really taking it, they're putting it a bad color on it. And so I think that's what's happening. It's more noise, more headline risk. This tit for tat will continue. This volatility will continue at least for another quarter, I would think, till all the tariffs are implemented. And if there are any scale backs and all that, they'll be back and forth. So he's made his first move. Let's see where it lands. And I have a feeling it's going to settle in between, and it's going to be conducive in the end. So market will be happy in the end. But right now, definitely the cross currents are very ominous. The market doesn't like uncertainty, and that's what's happening right now. It's reacting to that.
Is this just about headlines? Is the media hyping it up? Arnab Das, do you agree with that statement of Santosh Rao? Do you think there's more to it? Because look, as far as first move is concerned, it's gone beyond that. We're looking at 50% tariff on Canadian aluminium and steel. So what are the chances that we're going to see stock market crash, a stampede out of US bonds even, that could result in a big rise in interest rates? Arnab Das.
Well, thank you. Thank you for having me. Very interesting times, right? I think there is a lot of hype. I would agree, but I would say that, maybe deservedly so, right? I think the radicalism of the Trump agenda is maybe much more than it was cracked up to be, and certainly priced in to be in the markets, right? And I think also then was expected by, people around the world, and even by American voters. So I think it is true, as Santosh Rao said, that Trump is in some sense trying to level the field. I do agree that, pre-Trump 1, the US had the lowest tariff and non-tariff barriers of any large economy. And that now has been substantially reversed, and quite suddenly with a lot of volatility. And I think this is the issue, right? That there's a lot of uncertainty as a result of all of this kind of policy making, you could say on the hoof, policy making by tweet or by truth social. So there's a lot of uncertainty, and that kind of uncertainty is radical, right? And so radical uncertainty poses a threat that there'll be a sharp slowdown in the economy because consumers will pull back from big ticket items as their prices go into flux, and companies will pull back from investment because they don't know where this is all going to settle.
Yes.
Even if it's going to be coming good in the end, there's
Yes.
all this uncertainty could be a problem. At the same time, there's a longer term structural question, I would say, which is on the domestic front, there's a challenge to the rule of law and the expectations that many people have around the social contract and maybe around contracts in general
Yes.
in the US economy, which could pose a structural problem to the growth rate. And
Yes.
of course, there are other elements like immigration,
Yes.
but we can come back to those things.
No, absolutely. I mean, all points very valid. At this point, Sunil Subramaniam, just going by this kind of fall that we're seeing in the markets, do you get a sense that to make America great, this entire drive towards make America great again, is Donald Trump literally undoing its greatness? I ask this because he spent a lot of his first term railing against globalism, and that's back on the table in his second term.
So I think we just need to reframe MAGA as MAWAGA, which is make America weak and then great again. So I think that's an inevitable journey with the way he's going. Because why do I say that? Is because from a Trumponomics, market expected a huge boost through continuing tax cut, regulatory easing up, and US negotiating the tariff in a very positive way. And so the markets ran up. Now, what's happened is that the entire Indian stock market's value, $4 trillion, has been wiped off from the American market. And why is that? Because more market is realizing that the bad things from the Trump actions are going to happen before the good, which is, see, for Trump, America to become great again, the dollar has to be weak, right? Inflation has to be low so that America can export. But what's happening is that with the tariffs coming in, inflation is going to shoot up. A rate cut is going to be further away. And so the bad news comes in before the good. And if you look at American corporates, a lot of the imports into America are intermediate goods, which are used by American corporations and then sold to the customer. So they are now worried about their fresh investments, saying, how is this tariff going to impact their profit margins? So, and the way the fiscal situation in America is going, I don't think he can increase tax cuts, right? So his $5 million visa program, we'll have to wait and see. So I think what's going to happen is clearly we are going to see a period of uncertainty, a period of slowing growth. It's already visible in terms of the numbers which came in, right? Minus 2.8 versus an expectation of plus 4. That's a huge swing.
Yes.
The second is the pushback on the tariffs, right? Canada has put export duties on electricity into the US,
Yes.
right? Which could have hurt American consumers. So I think there's a lot of, what do you say? Bark and bite, right? I think that process of discovery
Yes.
is going to lead to an inevitable slowdown. So a Trump session is now the key word, right? Which is going to happen. But in the long run, I'm sure it'll work out for the US economy. But
is that the hope, or do you actually believe that, Sunil?
See, I'll tell you why. Because, see, Trump is a businessman at heart. I think he's doing all of this to negotiate better deals for America.
Will he get them?
Pardon?
Will he get them?
I mean, he has to roll back stuff which he can't do everything that he promised. I mean, he talks about Greenland acquiring, talks about acquiring Gaza Strip, he talks about all that. Obviously, all of it is not going to happen, right? So he's a man who pushes out very strong threats and then uses that to gain negotiating power. And I believe in the long run, that's why he's today started warning about a slowdown before the rise. That's why I said MAWAGA. Maybe
so
America
MAWAGA, make America weak again. Can that even work as a strategy? Santosh Rao, you started off with a very strong statement. Santosh Rao, do weigh in, because you heard Arnab Das, you heard Sunil Subramaniam. They do believe there is pain right now. And look at what's happening on Wall Street right now. S&P is now more than a percentage point down, which is the lowest it has been since the 12th of September. Tell me, with this incredible run that Wall Street has had in the past, until the point that Trump comes back, is that going to lead to a certain amount of weakness that makes it difficult for the markets to ride up again to the kind of levels it had?
No, I don't believe that. I think the economy is in a good shape. GDP is 2.3%. The earnings reports are reasonably okay. The valuation has become more reasonable. It's pulled back. It had gone up quite a bit. It has pulled back. So I think overall, I think things are. He is doing like he said, there's a government detox going on in terms of spending, and the market needs to adjust to that because there was tremendous spending going on, and he thinks we just can't afford to do it. He's doing the right thing. Now, how he conveys that has always been a big issue. He believes in just bringing a hammer to the whole thing. He needs to be more gentle because the companies do watch that, and the whole global world economists all over the world watch it. So I think he needs to convey the message. I will go with the Treasury Secretary, who said that inflation is not a concern. Yes, maybe there's a potential of it, but he doesn't think it's a big concern, and we can manage it. So at this point,
but wouldn't you believe what the Fed is indicating? Santosh Rao, wouldn't you go with what the Fed is indicating about the inflation scenario and how it's likely to move now? Do you think they have very little headroom now?
Well, let's see. I mean, there's an inflation report coming out this week. I think if it's weak, that's good. I mean, he will. I think he may adjust the interest rates there and see if he needs to lower it and all that. So there'll be some adjustment. He just wants clarity as to what he wants to do, what Trump wants to do. That's all he's looking for. He's not concerned about the economy. The job market is fairly reasonable. Yes, it's softening. It's coming down slightly, but it's not broken. Recession is not on the cards yet. So net, I would say none of the companies, I listened to all the earnings call as far as being an analyst, none of them brought out the recession word. So I think overall the outlook is really okay. Yes, it's not what we expected.
But look at what's happening with
Trump
the magnificent...
Just come in right away and prop up the economy. He's not. He's going to wait it out a little longer than what we thought, and let's see down the road.
Sunil Subramaniam, you heard that. Now, we've seen the run-up on Wall Street largely driven by the Magnificent Seven, the tech giants. Now that we are seeing this reversal in their magnificence, so to speak, what do you see in their future as of now? Because that's the sentiment driver, don't you think?
I think from Santosh's perspective, he's talking about the economy. And I think he's right that from the economy, it's not looking so weak. But what's happened is that market expected a strong economy, and now it's not going to be that strong. So the market is going to correct because those were in the prices. So I see this correction in the market lasting a little bit longer because this 50% hike is going to obviously have a bad effect on inflation. So the market's very surprised with the fact that the negatives are coming in far earlier than those positives are looking. And the market is definitely going to continue to be soft until there is clarity. And like I think Santosh also pointed out, markets don't like uncertainty. And this uncertainty, as long as it lasts, the market doesn't have a rope to cling on. It is going to be very, very volatile.
So what happens until we see clarity? Because as far as Donald Trump is concerned, the uncertainties always loom large. As long as he's president, are we to expect this kind of uncertainty that the markets will have to contend with?
I think at some point of time, he has to come to a trade deal and agreement. Like say in India, by fall. He'll have to come to an agreement that what do I do on your, reciprocal tariffs? How much of oil will you buy from me? How much of F-35 planes you'll buy? And so I do this. He has to strike deals which make sense for America. And I'll tell you why. Because America can't produce at $80,000 per capita GDP when China is at 13 and India is below 3. So he has to buy from cheaper countries if he's got to have a growth in America. So it's not like, he can just road roller his way through this. He has to strike deals, bilateral deals with the key suppliers to America.
At this point in time, that's the question. Will he be able to strike deals or not? Or are we going to see trade deals take place outside the US between countries that have had these tariffs slapped on them? And so are we expecting more uncertainties? Arnab Das, do you see a shift in the meantime away from high growth tech stocks now to more defensive sectors? How is this going to impact global equity allocations now?
I think people are doing that now, and I think they'll continue to do it for some time until these deals are struck. And I think we need to allow for the possibility that the volatility will continue because the agenda, is maybe it's more radical than expected and much more aggressive in terms of timing and sequencing, as we've been discussing, because Trump is in a hurry, right? He's only going to be in office for this term, in all likelihood, unless he somehow changes the constitution or rides roughshod over it. He may be constrained after the midterms to the extent that he allows himself to be constrained by Congress if it goes to a majority for the Democrats after the midterms in 2026. And so I think we need to prepare for at least several more months, if not quarters or even years, of uncertainty and volatility. And I think we should allow for the possibility that the objective here isn't just to strike trade deals and open markets, but to reorder the world economy and really put America first, not just make America great again, but really put America way out in front. Now, this point about the per capita income being much higher in the US, costs being much higher, well, of course, if you have this high tariff wall and this uncertainty as a trade barrier, as an investment barrier, it may be a way of increasing home bias, increasing investment at home and making the economy in the world much less open, right? I think that is a greater risk that people have been expecting.
Right. And for those home buys to kind of go up, we'll have to watch the interest rates. Santosh Rao, the Fed has indicated a higher for longer rate stance. But Trump is known for putting pressure on the central bank. Could this create more turbulence in the American bond and equity markets?
Yes, I think it will. I mean, he wants lower rates. He's a real estate guy. I mean, he loves lower rates. So I think in the end, common sense will prevail. He's aware of what's going on. His base needs the economy to be fine. They elected him based on that. So I think he's aware he's aware of all that. So, but don't forget, tariffs, we talk about that. Biden had tariffs. He didn't remove any of the tariffs that Trump put in the first term. So it's not something new. All he's saying is let's even the playing field. That's all he's saying. So we are talking as if it's something revolutionary, something new came off left field. No, it's been on the table all along. He's just kind of adjusting, calibrating it for every country, but he's bombastic about it. So everybody has that nationalistic spirit. Everybody, he hits on that, and so everybody fights back. But overall, I think he's just trying to be fair, and we need that. We need that to be fair, and he will succeed. Interest rates will adjust based on the reality.
Well, be that as it may, and we have differing points of view on this, but Sunil, Indian equities, they're going through this broad-based correction. How deep a downside are you looking at before some sort of stability actually emerges? Because look at the small and mid caps, they still seem overvalued despite these recent corrections. And that's the kind of word that we're getting from experts. You think now the possibility of more US rate hikes could trigger deeper corrections in these segments as well?
First of all, that I see an extended period of volatility, at least till the middle of April. Okay. And the reason for that is that, like this uncertainty there and the reciprocal tariffs start coming in from there, is the Indian earnings season. See, the India has suffered from a different problem in addition to this, which is the slowdown in the growth and the slowdown in the earnings, and hence the recalibration of the forward Ps. So based on that, today, Indian markets, the correction, they're no longer overvalued. They're reasonably valued, but reasonable value is not good enough for money to come in. You need a positive growth spike, which could be visible when the earnings season starts. So I see a period of volatility till middle April. Second is, do I expect a deep correction? No, because domestic fund managers, at last count, I saw that there was about 2.5 lakh crores of cash sitting on just mutual fund assets under management, right? Plus you have the LICs, you have insurance companies, you have portfolio managers. So I would say anywhere between 3 to 3.5 lakh crores of cash is there. So any stock which goes through a deeper correction, there's going to be buying support. So I don't see Indian markets going into a bearish trend or correcting. Yes, mid and small caps continue to be much higher valued than large caps. So it's a safer place to be in the large cap space now.
Yes.
The second aspect here is that if you see that ultimately, we're talking about a strong rate hikes in the US, right? Suddenly from that. But if you see the picture 6 months from now, right? With the tariffs taking effect, and then if US goes into a kind of a slowdown,
yes,
you could actually see rate cuts on the table back again, which is good news. Because the dollar is already weakened from 109. The dollar index has come down to 103.
Yes.
So from an FII's perspective, it's no longer that risky to invest in India because the dollar is weakening. So one of the things which hurt them was a strong dollar meant they were losing money on the currency.
Right.
So I think things could dramatically change for India in about a month. Next month, there will be volatility, but supported by domestic buying. Stock picking time for domestic fund managers. But I see that if the earnings season turns out good, this actually, from a flows perspective, could turn good for India because the US is no longer going to be a very favorite investment destination for everybody.
Santosh Rao, I'm going to ask all of you very quick questions. To you first, Santosh Rao. If you had to invest $10,000 today, would it be in Indian large caps or American tech stocks?
Well, I would go beyond tech in US. I think the rally is broadening. I would go into healthcare and financials in the US. I think that's where the real action is, even though it's pulled back slightly. But I think that's where it's safe to get in now and ride out this volatility because tech is under pressure right now,
yes,
even though it'll come back down the road. It's really financials and healthcare is where I want to be.
Sunil, will Nifty touch new all-time highs by the end of 2025? Yes or no?
Yes.
Arnab Das, what's the biggest global risk for Indian markets right now? Trump's trade policies or Fed rate hikes?
I think Trump's trade policies are the biggest global risk, US, India, other countries. And I think diversification is the right strategy rather than concentration in US tech.
Sunil, if you had to pick one Indian sector to bet on in 2025, what would it be?
Banking and financial services. I know today has been a bad day because of a specific event, but they are insulated from this tariff war. Domestic consumption is set to rise on the tax reliefs the government has given. And I think banks will be lending on EMI basis. Plus the savings potential also comes to banks through distribution of mutual funds and insurance. So I see BFSI as the safest play, given that the valuations also are fairly reasonable compared to the broader market.
Santosh Rao, final question to you. Is now the time to go all in, to sit tight, or sell off risky bets?
No, it's not the right time to go all in. I would wait it. Let the dust settle. There's so much cross current going on. You don't want to jump in there here. You don't want to catch the bottom. I really don't know where the bottom is. Let it go down further if it has to, but ultimately it'll bounce back up. So I would jump at that point. It's never easy to time the market, but I would just say because of this cross current, wait it out a little bit, stay in the dividend paying stocks, utilities, all the defensive stocks, and then jump back in when the market again is stable. So I wouldn't jump in at this point. All in.
Well, the equity markets, they're caught in this web of uncertainty. All my panelists agree on that. For Indian investors, the next few months could be very crucial in determining the direction of the markets. And our experts are pointing out that large caps, they may be reaching fair value. Small and mid caps, they may still have some room to correct. Investor sentiment, of course, remains fragile in all of this. So the key takeaway is to stay cautious, but not fearful. Keep an eye on valuations, avoid a herd mentality, and focus on strategic allocations. There's no taking away from the fundamentals. But a big thank you to my panelists, Santosh Rao, Sunil Subramaniam, Arnab Das. Thank you for joining us with your sharp insights here on India Tonight. We'll take a quick break. On the other side, we're talking about Donald Trump still increasing Canada and the kind of steel and aluminium tariff now has been hiked to 50%. We're talking about the impact in the markets. The S&P now has fallen more than a percentage point, bringing it to its lowest since the 12th of September. We'll talk about what Wall Street is doing right after this. Stay with us.